Reserve Chairman Jerome Powell sat down in an interview with 60 Minutes earlier this week. He was discussing the economy's recovery as the coronavirus vaccine rollout continues. And although Powell is expecting strong economic growth this year, he's worried that we will reopen too quickly.
Economy still in jeopardy.
I would say this. What we're seeing now is really an economy that seems to be at an inflection point, and that's because of widespread vaccination and strong fiscal support, strong monetary policy support. We feel like we're at a place where the economy is about to start growing much more quickly and job creation coming in much more quickly. So the principal risk to our economy right now really is that the disease would spread again. It's going to be smart if people can continue to socially distance and wear masks.
You seem to be saying not about COVID, but about the economy, that we're out of the woods.
Well, I'd say that we and a lot of private sector forecasters see strong growth and strong job creation starting right now. So really, the outlook has brightened substantially.
So while Chairman Powell seems a little skeptical of the economy quickly bouncing back, we are now seeing traders take a pause on the market as investors await earnings. This after the S&P 500 and Dow hit record highs last week. So when should we expect another record level comeback? Joining me now from New York City, Chairman of Great Hill Capital, Thomas Hayes. Thomas, thank you so much for joining me. So, Thomas, there's been a lot of discussion even now about the lockdowns and whether we're opening up too soon. We've seen how some of the states have handled it, like Florida, Texas, Arizona. Things are going pretty well there. But then we hear from lawmakers in Michigan and some of the other states that want to kind of remain on lockdown. So how do you think this is going to affect our country and our growth?
Well, Stephanie, thanks for having me. As you know from this morning, the big story was the J&J vaccine, which had, kind of made the market stumble a little bit at the open. 1 in a million situation where 6 people out of 6.8 million vaccines had adverse effects. And that's similar to the flu vaccine. And CPI, the inflation numbers came in a little bit hotter than expected this morning, with gas prices up 9.1%. Cutting those ability to drill on federal lands is not going to help on that front. But as far as it goes, I was in Florida this weekend, and it's booming. You can't get a dinner reservation after 4 o'clock in the afternoon. It's just packed. The economy is flying. So I think moving forward, what we're seeing on a consensus basis on Wall Street, the S&P earnings estimates for 2021 are too low. They have to keep bringing them up every week. And we're going to see a taste of that tomorrow with bank earnings. That's the big story for tomorrow. You've got JP Morgan, Wells Fargo, and Goldman Sachs all going to report. And their report is going to be great because the yield curve is the steepest it's been in about a handful of years. That helps net interest margin. They're over-reserved. They were planning on 20% unemployment last year. Now we're at 6%. So those credit reserves are going to come back as earnings. And they can also reduce their operational footprint moving forward, with many people still working from home. So I think bank earnings is going to kick things off tomorrow and is going to show us that actually earnings estimates are too low. And by the end of the year, even if we have some short-term chop, we should see higher highs in the stock market.
Absolutely. And you talked about being in Florida and how the economy is booming there. And that's what we need. We have Democrats, again, who have pushed these $1 trillion packages for relief for the American people. But the greatest relief for Americans is reopening this country. Of course, you have to balance and you want to do it in a safe way. You don't want people to get sick. But that being said, we have trillions of dollars worth of plans from lawmakers right now. Now there's even discussion about a $2 trillion plan. Infrastructure plan has very little to do with infrastructure. You look at the plan, it's 5-6% for bridges and roads, and the rest of it's kind of like Green New Deal stuff. How's that going to impact us as a country going forward where there's so much borrowing going on?
Yeah, well, that's the risk, is the inflation risk that everyone's worried about. We did have a situation like this in the late 40s after World War II, where debt to GDP got to 120%. Debt got to 120% of GDP. We're approaching that level now. We were fighting a visible enemy back then. We had to fight an invisible enemy this time. But to put it in perspective, it is a lot of stimulus. We've done $5.3 trillion in spending, with another $2 trillion on the way, like you said. And it may just be a lot. We are going to grow grow. Consensus is 6% GDP this year. I think we're going to see 7 to 9%. So adding more fuel to the fire may get us a little bit of inflation that the Fed is not generally expecting to be permanent. So we're watching wage inflation. We're watching these prices in commodities, and it's certainly going to run a little bit hot. When you add that up, we're approaching, between the balance sheet expansion, between the 5.3 trillion fiscal and another 2 trillion, 50% of GDP in stimulus, compared to GDP only contracted $750 billion, and we're spending trillions of dollars to solve that problem. So certainly we wanted to get ahead of it last year, but now it might be a little bit more than expected. And to your point, we need more in roads and bridges, and probably a bit less in everything else that's in that package.
Yeah. And again, it's just like, this is so soon in the administration and what the Democrats are pushing right now. And I don't think this is going to end. I think we're going to probably continue to see these trillion-dollar bills coming through Congress. And so, again, a lot of reasons to be concerned about that. I wanted to get your thoughts on the non-fungible tokens. There's a lot of conversation about that. A lot of us don't really know what that means or what it is, but maybe you can articulate that for us.
Thanks, Stephanie. Yeah, the non-fungible tokens, it's a little bit hypey in the short term. It's digital tokens on the ledger. They're unique. And we saw instances of LeBron James with Top Shots. He sold a $280,000 token or image, $125,000 image, and $100,000. Then we saw Beeple, the artist, sold thousands of small images for $69 million. And the Twitter, Jack Dorsey's first tweet sold for $2.9 million. It's a little hypey here. I do think there is going to be a place for these assets in the future, but like all new technologies, they really get kind of a mania in the short term. It gets washed out, and then the long term, you see what's salvageable moving forward. The New York Stock Exchange is doing a first trade token where they're going to capture those first moments of becoming public for Snowflake, Spotify, DoorDash, and Roblox. So we'll see where this leads. But I think what you're finding here is, let the mania kind of, we're seeing pockets where it's cooling in terms of Top Shots. Be a little careful here in the short term, but long term, there may be value to be had once you get the first big washout and everyone says, see, NFTs, weren't a big deal and no one wants them, and then it might be time to pick some up. But that's we're probably months or year plus away from that.
I guess I'll ask you a personal question. Is this something that you would purchase? I mean, I just think it's so weird that you can't actually hold on to it. And as you pointed out, Jack Dorsey sold his first tweet for like $2 million. And what do you do with it? I don't understand it. I get like people like to collect things, and maybe like collecting a baseball cards, or like something that you can actually hold in your hands. But this you can't. So it kind of, in my opinion, seems like a scam.
Yeah, I'm with you, Stephanie. I only like to buy businesses that produce yield. If it doesn't produce anything, I'm not interested. So I'll leave that to other people to take a look at NFTs, but certainly not my cup of tea.
Yeah, me either. Well, we're going to leave it here. Thank you for your insight.
Thanks for having me, Stephanie.
Of course. Coming up next, according to the